The U.S. stocks were in the green on Friday despite a weaker-than-expected U.S. jobs report backed by optimism around U.S.-China trade relations. The S&P 500 climbed by 0.1% on Friday to close at 2,978.71 and advanced by 1.8% for the week. The gains came amid hopes that the world's two largest economies could soon make substantial progress in de-escalating their protracted trade dispute. China's Minister of Commerce said on Thursday that Liu He, the country's top trade negotiator, spoke by phone with the U.S. Trade Representative Robert Lighthizer and Treasury Secretary Steven Mnuchin. They agreed to meet in early October for another round of negotiations. Insiders from China have also hinted that the upcoming trade talks could lead to a breakthrough. The Dow Jones Industrial Average ended the week at 26,797.46. For the week, the Dow gained 1.6%. Meanwhile, the Nasdaq Composite slipped by 0.2% on Friday to end at 8,103.07. For the week, the tech-heavy index still gained 1.6%. According to analysts, the fact that the major indices hit new 5-week highs confirms the end of the August pullback. And despite another twist in the trade war, a larger-scale rally in the U.S. stock market is likely. In corporate news, shares of Lululemon Athletica jumped by more than 7% on Friday after the release of quarterly results, which topped analysts' expectations. The apparel maker said its same-store sales rose by 15% for the year-earlier period. The company's stock finished at $203.14, logging an intraday 7.8% rise and a 9.18% weekly gain. Speaking of the worst performers, Domo Incorporated was down by 37.45% on Friday after the software company reported second-quarter earnings. The results met or beat expectations, but investors were rattled because Domo also cut its full-year guidance. The stock closed at $15.77 on Friday, posting a weekly decline of 35.71% per share. The company cut its forecast for full-year fiscal 2020 and now expects revenue to be $168 million to $169 million, down from the prior outlook of $173 to $174 million. Adjusted net loss per share for the year should be $4 to $4.10, worse than the previous guidance of $3.79 to $3.87 per share. You've watched Weekly Financial Review on Insta TV with me, Anna Kasaltkina. Stay tuned.